TLT stock. This is an ETF for the U.S. Treasury bonds, 20 plus years, 20 and 30. My take on this, first off, I'm waiting for Friday, but I'm getting ready to sell. I'm thinking that we're probably, at this point, we've seen sort of the medium term high. I had been kind of stepping in, selling some options. And when I say sell TLT stock this way, I'm probably going to be selling calls. I don't know that I'm going to be buying puts, but what I want to wait for is Friday's unemployment number. This will really determine what's going to happen throughout the week. And then, of course, the next several months. We're not seeing unemployment numbers as high as we probably would want to see. We're not exactly there with that. Some of the other data points that I didn't cover because of the holiday season, I kind of cut everything off around the 21st of December. We got personal incomes, personal expenditures, and of course PCE index showing that inflation is improving, but there are some concerns. I'm keeping a sharp eye on housing. Housing prices are starting to move higher because mortgage rates are starting to move back downward. If we get a big spike in housing prices again, that could spell more inflation. This could force the Federal Reserve to keep interest rates higher. Therefore, TLT stock, I'm looking to sell some calls and kind of just see a TLT stock moving in a sideways direction, and I'll take advantage of that, selling calls, selling puts when it gets too low. Let's jump in and I'll show you the charts I'm looking at. If you're just finding me for the first time, thanks so much for stopping by. I am first and foremost an economist, and I look at the markets, an indicator, based on what's going on with the economy. Now, the move we saw, we're looking at the U.S. 10-year Treasury rate. Now, TLT stock trades off the 20 and 30s on the Treasury, but I used the 10-year as sort of the baseline for a lot of my analysis simply because it's sort of the middle point, but it's the benchmark rate. So we're looking at the 10-year Treasury yield, popped up above 4% again today, then a flight to quality with the selling in stocks, rushed back into Treasuries, and this pushed yield back downward. But my take on this is the move we saw lower, this whole move downward all through November and in through December, too much, too fast, too far. That there's still a lot of headwinds with inflation, and therefore that bottom, you see the 3.8 pushing into 3.9. I'm kind of calling that as my medium-term low. All things equal is really kind of one of the biggest things there. This is the TLT stock Treasury bond ETF. This is the chart itself. What I'm saying is at this point, we're probably not going to see above 100, 101, 102 in that range. And this is where I'm looking to sell calls, maybe 102 half, somewhere in that range, with the idea that we're probably going to be moving sideways to back downward. I think with today's selling in the market, the broader stock market, pushing yield back downward as individuals rushed back in and bought more bonds, that's a temporary thing. I don't know that we're necessarily going to see a big sell-off in stocks given the information we have today. Tomorrow's a new day, though. We get unemployment numbers in the form of initial claims and continuing claims. Keep your eye on that. If we don't see numbers big enough, if they start to soften out and mellow out, then bond yields are likely to head higher because the Federal Reserve is going to have to keep interest rates higher for longer. The bond market will need to adjust. Given that, here's a bigger look at the U.S. 10-year Treasury rate. I look at, say, the 3.5, 3.6 level as kind of being that low point on the 10-year Treasury rate. And again, TLT stock, the ETF, trades off the 20 and the 30. But I always directly towards the 10 years, kind of the way I look at things. Given that, the 105 level, I think is probably going to be the high for TLT stock. I cannot see us dropping below 85 again, given the information we have today. But I'm looking to step in and see if I can get into, and I'll do so after we get the information on Friday to see if I get what the signal I'm looking for. But I'm going to be looking to sell anywhere from 100 to 102.5. Calls in there with maybe 2 weeks left to expiration. Sell them, let them expire worthless, bring that premium in. If I keep doing that week after week after week, never looking for a home run, always money ball, base hit, after base hit after base hit. These are the numbers I'm looking at. Non-farm payrolls, yes, they have been narrowing, but not a whole lot. I mean, this is still an economy that is moving forward. I don't see this as necessarily we're here at a soft landing level. I see this as a flyby, that they haven't really brought it down just yet. It's cautionary. Personal incomes kind of came in flat for the quarter. Expenditures, again, these two charts, believe it or not, the last two charts I just showed you, this one and the one just previous, are the most important charts for me. As an economist, I want to know what's driving this economy. And the first thing I'm looking at is the biggest driver of the economy, the consumer. The rate of growth of their income determines the rate of growth of their expenditures. If we see a declining rate of growth in incomes, we will see a declining rate of growth in expenditures. And of course, increasing will do exactly that. We're kind of right in that middle spot. If we see incomes kind of moving downward more and more, you're going to see more layoffs, which will sort of kind of snowball into something a little bigger. But that also means revenues for companies are going to start dropping, which means everything needs adjusted, including the value of the stock market. So that's something I keep a close eye on. Of course, PCE, inflation deflator, this came out just last week of the year, of course, and we are seeing PCE inflation, the core rate, moving lower. But the biggest portion of that core rate is housing. House price index, this goes all the way back to about 2000. And as you can see, we had some big surges. Of course, 2005, 6, 7 led into 2008, 9, 10. Kind of mellowed out a little bit. But then 2020, of course, skewed everything because interest rates were so low. With interest rates moving as low as they were, everybody rushed in. Prices shot up. You can actually see house price index shooting up as much as it is. We're starting to head back upward. First off, supply and demand for housing is entirely skewed in this country. Keep a sharp eye peeled toward house price index year over year change. If we start seeing big jumps in this number, the Federal Reserve is going to start getting real nervous. 70% of the inflation we saw was housing. So if we start seeing these numbers moving higher, that could spell higher interest rates for longer. And the culprit that we're seeing the move back upward, keep in mind, supply and demand are skewed abnormally. Mortgage rates are starting to slide more and more. If they go sub 6.5, maybe hitting as low as 6, maybe going as below to 5.5, that could really spell a lot of trouble for house prices, which will reinitiate the Federal Reserve's concern on inflation. Because of that, this is what I'm looking at. I think we might be capped with TLT stock. I think I'm going to be looking to sell into any kind of rallies, step in, sell some short-dated calls, bring that premium in, base hit, base hit, base hit. Make sure to hit that like and follow button. I break down the economy and show how that affects the stock market. If that's what kind of content you're looking for, make sure to hit that like and follow button. See you in the next video.